Hello, good evening. Today, let's talk about a major transformation happening in global markets. The shift of investment focus away from the United States towards Europe and China. For decades, the US has been the undisputed leader in global financial markets, attracting investors with its strong economy and stability. However, recent economic and geopolitical factors are changing this dynamic and pushing investors to explore new opportunities elsewhere. Let's look at the key reasons behind this shift. So, why are investors looking beyond the US now? Several factors are driving this shift. First and foremost, the global trade war and tariffs. The ongoing trade tensions between the US and China have disrupted global supply chains and increased market volatility. US tariffs on imports have raised costs for businesses and consumers, reducing economic confidence. This has led investors to diversify their portfolios and seek stability in other markets. China's tech growth and economic resilience is one reason which is accelerating the investment focus at this point of time. Despite the trade war, China has continued to strengthen its technological dominance in sectors like AI, semiconductors, and green energy. The Chinese government has also introduced stimulus measures to support its economy, making it an attractive destination for global capital. Besides this, Europe's stronger economic outlook is also one of the reasons why the Eurozone is making bold fiscal moves, including a proposed 1 trillion euros package to stimulate the growth. Germany, Europe's largest economy, is considering major reforms to enhance spending and boost productivity. These measures have restored confidence in European markets, leading to higher investor inflows. Also, market indicators are reflecting the shift in investment focus of global investors. Let's look at them briefly. Economic indicators confirm this shift in investor sentiment. If we see the S&P 500, it has declined by 1.8% this year, signaling weaknesses in US markets. In contrast, European stocks have surged nearly 9%, outpacing US equities. The euro has strengthened against the US dollar, reflecting growing confidence in European financial markets. Even US banking stocks have struggled, underperforming compared to their European counterparts due to economic uncertainty. Now, the question that arises in our mind is, will the US dollar still hold strong? Does this mean that the US is no longer an attractive investment hub? Not necessarily. Some investors still believe the US dollar will remain strong due to higher interest rates and the overall resilience of the US economy. However, the dominance of the dollar is being challenged, with global investors diversifying into alternative assets such as European equities, gold, and Asian markets. This marks a tactical shift in investment strategies rather than a complete abandonment of US assets. What this means for investors and businesses? This shift in global investment patterns has significant implications. For investors, it means diversifying beyond traditional US stocks and considering European and Asian markets for better returns. For businesses, this could mean adjusting strategies to align with global economic challenges and changes, focusing on regions with stronger fiscal policies and economic stability. For the policymakers in US, the warning is trade wars of course sounds good for the local for the local population and for electioneering. But the challenge is to regain investor confidence by implementing policies that encourage growth and competitiveness. To conclude, I feel a new global investment landscape is emerging at this point of time. We are witnessing a major transition in global finance, one where Europe and China are rising as stronger investment destinations, while the US faces increasing challenges due to trade policies and economic uncertainties. The question is, will the US adapt and reclaim its position, or will we see a long term shift in investor preferences? Only time will tell. Thank you very much for your patient hearing.